Today we'll start with Unit 4 revision session, which is taxable income and non-taxable income. So we understood what is filing status, and we also understood dependents. So small correction in the dependent, I have messaged in the group as well. One correction which is for MSA, right? So that is for other dependents. So that was one correction in the dependents. So rest are fine, but only MSA. So make sure to see that MSA we will apply for other dependents. And also today we'll start with taxable income and non-taxable income. Before going into that, let's see the form 1040 quickly. So then we will go with unit 4 taxable income and non-taxable income. So this is form 1040. So if you are already working on the individual taxes, then you know this form 1040. And if you are not working in 1040s, then you can see this form. So here we can see filing status. So we have done with filing status and also dependents. So once you identify the filing status and once you confirm the dependents, then we have to input or we have to plug in the information relating to the incomes. So in the income, we have a couple of incomes. One, you can see wages income and tip, household employee wages. So this entire line 1 year. So bifurcation we can see here. So A2's some like to till G we have, and also we have tax exempt interest and qualified dividends, IRA distributions, pensions and annuities, social security benefits. So we will cover one by one. For now, just see what are the incomes we have directly on Form 1040, and also um, capital gains attach Schedule D. If we have capital gains, then we have to attach Schedule D, and also additional income from Schedule 1 line 10. That means what are the incomes we have straight away prima facie and turn party, so only seven. Apart from that, if we have any other income other than these seven, then where to enter, we have to enter on schedule 1. So schedule 1, let's quickly open schedule 1 of 1040. So this is schedule 1, additional income. So in the additional income, we can see taxable refunds and credits offset of the state and local income taxes, alimony received, business income. In case if the person is self-employed, then we will be attaching schedule C for that. Other gains, rental, real estate royalties, schedule E, and also farming income, unemployment compensation, other income. So other income we can say all other than the line other than until 7. So if you have other income, then we will be reporting on line 8. So the summary we can see here, additional income. So this is the basic understanding. The you know income, like in this we have seen couple of incomes. So now these incomes we can classify into two. One is taxable income and another one non-taxable income, which is excluded income. So in this what we understood in the form 1040. So you can see here. So after adding additional income, we will get total income. So this total income, and again we have another thing which is adjustments to income from schedule 1. So in the same schedule 1, so we have additional income which is part 1, and also which is part 2, which is adjustments to income. So adjustments to income which basically reduces the total income while paying the taxes. The total income is important, the taxable income is important. So in this we can reduce couple of expenses, I can say deductions, which are adjustments to income, which are educator expenses and also health savings accounts. So if you keep some money in the HSA account, then you will get some benefit. So on that to that extent, we no need to pay any taxes. And also deductible part of self-employment taxes, self-employed. So a couple of deductions or adjustments to income we have. So this amount we can reduce from the total income. So first thing we have to calculate the total income, and then we can reduce adjustments to income. So this again we will cover. And now the balance we will get adjustments adjusted gross income. We also call it as AGI. So this is prime line, which is important line. So and below also we have some deductions which are standard deductions or itemized deductions. So this is below the line item, because line number 11 is the which is prime line or main line, I can say. So above the line we have adjustments to income, and below the line we have standard deductions or itemized deductions. So above the AGI we have some adjustments, and below the AGI we have some deductions which are standard deductions or itemized deductions. So the finally we will get taxable income. So forget about QBI and all. So finally we will get taxable income. So how to arrive taxable income? So first we will sum up the total incomes, and then we will do adjustments to income. We will reduce the adjustments to income. So the balance we will get AGI, which is adjusted gross income, which is line, and also below that we have standard deduction or itemized deduction. So after that we will get taxable income. So with this, can you just tell me how to calculate the taxable income, guys? How to calculate taxable income? Guys, can anyone quickly?
Include income from all the sources.
Total income, okay.
Then make adjustments to the income.
Adjustments, okay.
Then we would get our adjusted gross income.
ACI, okay.
And then we will use itemizer standard deduction.
Standard or itemized deductions.
Then we would get our taxable income.
We got taxable income, correct. So this is the flow of the taxable income. So in this, where we can see adjustments to income, we can see schedule 1 part 2, we can see adjustments to income, and also total income, which from 1040 plus schedule 1 of part 1, schedule 1 part 1, correct. So we can see the total income directly on 1040, and as well as schedule 1 part 1 also we can see total income. So and then adjustments, AGI, standard deductions or itemized deduction, and taxable income. So now couple of incomes which are not taxable, so we call it as income excluded. So couple of incomes which are not taxable, so non-taxable. Non-taxable income, and also we have deduction. So we will quickly see the difference between non-taxable incomes and deductions. So non-taxable income, which we will not include in calculating your total income. So non-taxable income means, do we need to include in the total income? No, we will not include in the total income. So non-taxable income, total income. So do we need to include? No, we will not include in the total income. So deductions. So if you have any deduction, so basically we will include in the total income, and then we will get the benefit. So that is actually, the major difference. I can say non-taxable income and non-taxable income. Do we need to include in the total income? No, not at all. We no need to include income, except 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 tax exempted interest. Except tax exempted interest. So what is tax exempted interest? So basically tax exempted itself, it is non-taxable. We no need to pay anything on the same. But tax exempted interest, only the only the specific item which we need to include in the total income. Let me show you the form 1040 again. So here form 1040. So in this we have tax exempt interest and taxable interest. So here when we, like, let's say we have $50,000 wages income, and also $5,000 taxable interest, and $3,000 tax exempted interest. In this, if you can say total income, which is 50,000 plus 5,000 only, which is 55,000. So do we need to include 3,000? No, but this we should report in the form 1040, because this tax exempt interest which will be helpful while calculating your social security benefit. So for that purpose, we include, even though it is not taxable, even though we are not paying any taxes on the same, but still for reporting purpose, we will include tax exempted interest in the 10 party. Do we need to pay tax on the same? No, we no need to pay any taxes on the same. But still for SSB purpose, we will include. Okay. So this is one point. Yeah. And also, so for these non-taxable incomes, for this, it will not affect anything in the income level, and which is stays always non-taxable. But deduction, which we first include and then we will subtract, and then so many of the deductions basically based on the AGI. So AGI phase out we have, but will it impact anything? AGI phase out will impact anything on the non-taxable? No. So it will not impact anything here. No impact here. Impact is there for deductions. So your deductions basically based on your AGI. If your AGI is high, then we cannot claim the deductions. But what about non-taxable or exclusion cases? So it is not based on the AGI. So it is based on the nature of the income, right? So this is one difference, non deduction and non-taxable income. Now we will quickly understand one more important point. Yeah. So now, tax exempted interest we are saying, right? So what is meaning of tax exempted interest? Tax exempted interest. So tax exempt interest, any interest which we are receiving from state or local governments. We also call it as municipal bonds. So municipal bond interest are exempted. So do we need to pay tax on the municipal bond interest? So not at all taxable. So any interest from municipal bonds, municipal bonds interest are taxable or non-taxable? Guys, where we will report interest from municipal bonds, taxable or non-taxable?
Non-taxable.
Non-taxable. So do we need to report anywhere?
Yes, in line 2.
Yes.
Yes, even though it is tax exempted, but still we need to report because guys,
For to get the social security benefits.
yeah. So while we calculate social security benefits, so social security benefits, we will talk about social security benefit later. But generally, social security benefits are some cases we no need to pay taxes, or some cases we have to pay 50 percentage, or maximum we have to pay 85 percentage. So that based on the income. So for calculating the income, tax exempt interest is also very important element. And also we have foreign earned income exclusion. So that portion also we will add while calculating social security benefit. So that we will see calculation. That is also very important in the exam. Now this is the basic understanding of the exclusions and total income and AGI. So these are very important. Now these entire incomes we can classify into two. One is earned income and earned income. This is very important. Earned income. So entire income we have to classify into two categories: earned income and unearned income. So what is earned income? Any income which we received for services performed. So if you are performing any services and if you are receiving any money to that for service performance, then we call the income as earned income, services performed. So best examples I can say wages and salaries, tips, everything, salaries, tip, and also self-employment income, self-employment income, and also any professional fee. So these are earned income. So what about unearned income? Income not from services. So this is also income, but not from these services. So those type of incomes we call it as unearned income. So best examples: interest, dividends, interest and dividends, and also like any other income other than these. So interest, dividends, and also alimony, disability benefits, taxable alimony.
Rent also, right?
Yes, taxable alimony, disability benefits, rents, and also capital gains. So these are unearned income. The classification of earned income and unearned income is very, very, very important because if you have earned income, usually why to calculate the income? So what is the point of calculating this income? So because we have to pay some income tax to the US department, right? So we have to pay income tax. So whether it is earned income or unearned income, it doesn't matter. We have to pay income tax on both cases. So yes, we have to pay income taxes and we have to pay income tax on the unearned income case as well. But one more additional burden will be there on the persons whoever is earning earned income. So they need to pay some additional taxes, which we also call it as FICA taxes. So will be FICA taxes will be applicable for the persons who are getting earned income. So for them, yes, we need to pay FICA taxes. And do we need to pay FICA taxes on earned income? No. So FICA taxes will be there for only for people who are getting earned income. So they only need to pay taxes, which is FICA taxes. So in USA, we have two types of tax rates we have. One is ordinary tax rates and another one special tax rates. Anyone know ordinary tax rates and special tax rates? So any country's income tax is progressive based income tax. If your income is increasing, your tax rate also will increase based on the slab rate, slab systems we have. So in the USA, this US income tax also same. So ordinary income tax we have and special income tax rates we have. So which is 10% slab, 12, 22, 24, 32, 35, and 37 percentage. So these are the tax highest percentage. So when it is coming to special tax rates, so some cases we need to pay 0% only or max 15 percentage and maximum 20 percentage. If your income subject to special tax rates, then you will be paying maximum 20%. And if it is other than special category of income, we usually have to pay 37 percentage. So when we will apply special tax rates, so if you have dividend which is qualified dividend, then we have to pay, your income will be classified under special tax rates. So only for qualified dividend, no. So we have for capital gains, in this long term capital gain cases, we need to pay special tax rates. Other than these, we have to pay regular ordinary income tax rates. So do you know what is the tax rate, highest tax rate in India? Anyone know?
30%.
30 percent.
30%.
But US people are paying 37 percent, which is ordinary regular income taxes. Apart from that, they are also paying FICA taxes. So which is more burden. If the person is having high income, then they have to pay huge taxes. Yesterday, I have seen one tax return. I think his net income, I can say his AGI stands at $30,000. Taxpayer single, he is paying around $55,000 taxes, which is very huge. So that is not the case in India. So we usually will not pay taxes, right? So we will use all possible ways, uh, either in legal ways or illegal ways, but we will pay less taxes. But USA, the citizens definitely they are more concerned on the taxes. Definitely they will pay less high huge taxes if they having high income. And also, yeah, so these are the income
Jay,
tax.
just a quick question here.
Yes, yes.
Is this table important from
No, no, no,
exam
not at
point
all.
of view?
Yeah, not at all required. Yeah, but
Okay,
but
okay.
may just understand the logic. So this is
Mm-hmm.
very important in some cases, like I can say recapture of depreciation, and
Okay,
so at that point there is some logic. So recapture of depreciation, which is ordinary income depreciation. So that at that point, this table is important. You
okay,
need to remember any thresholds. So whenever it is required, I will tell you. Okay.
okay, okay.
Now,
Thank you.
now income tax. So we understood incomes are two types: earned income and unearned income. Income tax we have to pay on both cases, and FICA taxes we have to pay only on earned income. So FICA taxes, okay, we understood we have to pay FICA taxes. What is full form of FICA taxes? Federal Insurance Contribution Act taxes. So Federal Insurance Contribution Act taxes, which is basically consist of two components. One is FICA taxes, social security taxes, and another one Medicare taxes. Social security taxes. So I'm not writing the full form. So okay. So FICA taxes, which is Federal Insurance Contribution Act taxes. So which consist of two components. One is social security taxes and another one Medicare taxes. These calculation of FICA taxes are very, very, very important because IRS love to test on these areas. So make sure to remember all the limits. Now, like in India, we have provident fund, right? So employer will contribute half and employee will contribute half. Same wise here, PICA taxes also, if the person is employee, if the person is employee, employer will contribute half and employee will contribute half. So yeah, now we'll see the employee contribution and employer contribution. Now, FICA taxes total percentage, employee need to pay 6.2 percentage and employer also need to pay 6.2 percentage and Medicare 1.45 and employer contribution also 1.45. So these are the tax rates. So if we can total 6.2 plus 6 point, which is 12.4 percentage, which is social security taxes, and Medicare 1.45 plus 1.45, which is 2.9 percentage. So total 12.4 plus 2.9, which is 15.3 percentage. So if the person is employee, then employer need to contribute 6.2 and employer also need to contribute 6.2 and 1.45. So total 15.3. So if the person income is increasing, then this taxes is additional burden on him, right? So there is, if the person standing at 37 percentage, then it is a burden to the taxpayer. So that's the reason. Okay, so this social security portion, which is huge, right? So irs irs made one cap limit for this. So how much cap limit for social security, which is 168,600. This you must remember, 168,600. So that means if the taxpayer income exceeding 168,600, do we need to pay social security taxes on the excess amount? No. Up to the 168,600, we definitely have to pay social security taxes. So more than this, do we need to pay social security taxes? No, not at all required. What about Medicare? Do we have any cap limits for this? No cap limit. So here, cap limit, no cap limit. If the income is increasing, then we have to pay additional Medicare taxes. So that is, another thing in the Medicare taxes. If the income is increasing, additional Medicare taxes we have. Additional Medicare taxes. So additional Medicare taxes we have. So yes, we have additional Medicare taxes. So how much percentage? 0.9 percentage. So this Medicare, additional Medicare taxes, we have some calculations. So the calculation we can see on form 8959, form number 8959. So what you must remember? You must remember this 168,600 and also this 0.9 percentage, which is additional Medicare taxes. The calculation is very important, which we will see in the additional taxes section. For now, you just remember this. We have to pay 0.9 percentage. Form number 8959. This is very, very, very important. Definitely, you will get a question on the calculation of additional Medicare taxes. And yeah, now coming to the Social Security, this is 168,600 per person per year limit. So this is per person per year limit. So every year this amount will change. So let's say if taxpayer is working for two companies, so one company $100,000 and another company $100,000. So the same taxpayer Mr. M is working for one company which is X and which XYZ LLC, and also he's the same person is working in ABC LLC. Now XYZ LLC, how much he's getting? $100,000 and ABC LLC also he's getting $100,000. So total income for Mr. M for 2024, how much income? 100 plus 100, which is $200,000. Now think about X point of view, XYZ LLC point of view. So what they will do? So it is responsibility of the XYZ LLC, which is they have to deduct some income tax. Yes, because this is withholding will be there. Withholding of income tax. Yes, they will do withholding of income tax. both XYZ LLC and ABC LLC. What about FICA taxes? Because it is also responsibility of the employer to withhold some FICA taxes. So yes, they will do withholding for FICA taxes. Now the problem is FICA tax includes two components. One is Social Security and another one Medicare. Social Security, we have per person per year limit is 168,600. Guys, getting this point? Say yes or no.
Yes.
Yes.
So here what happened? So he's working for one company and the XYZ LLC withhold some FICA taxes and ABC LLC also withhold some FICA taxes because their point of view, the income is below the 168,600 company point of view. So ABC LLC also company point of view, the income is 168,600. But when it is coming to individual point of view, after the year end, the income limit is more than 168,600. That means they have already done some withholdings on the 100. So let's do some quick calculation. So how much withholding we can see in XYZ LLC? So income tax, forget about income. So let's say FICA taxes. So social security taxes, how much they will do? Employee portion and employer portion. Employee 6.2 they will do, correct? 6.2 percentage they will apply. And here ABC LLC also $100,000 into they will do FICA taxes of 6.2. 100 into 6.2. So here also 6.2. And here amount which is $200,000. But what is the social security base limit for 2024?
168,600.
168,600.
But what happened here? He had paid on $200,000, but it should not be the case, right? So he should pay on 168,600, but excess withholding had done. So how much excess withholding? So here on 31,400, indirectly taxpayer had paid social security taxes. So on this amount into 6.2, withholding already done. We cannot change the wages statement. So now what we can do? The excess amount we can get as refund, which we also call it as excess social security withheld credit for excess social security and RRTA tax withheld. So which is the credit actually. So we can get as a credit this amount. Thus getting this point. This we can see only if the person is working for more than one companies. Definitely we can see this kind of scenarios. USA, they do some cases like people will work for two companies. So in that case, so first thing what we have to see the total income individual two companies. So first company income we have to see and second company income also we have to see. So and sum up the total income. If the total income exceeded 168,600, then see the difference. So total income minus 168,600. So whatever the difference we have, then apply directly 6.2 percentage. So that amount have already withhold by the companies. So the excess amount we can get as refund. So if the person working for two companies, in that case, what we have to see? We have to see the total income minus 168,600. So you will get the excess social security withheld base amount. On that, apply 6.2 percentage. So that you will get the amount which is created for excess social security withheld. So that is the amount. Like in the exam, you will get these kind of questions. So any questions or any confusion in this? If no question, then we will go with another important area. This is clear, guys? Yes, no, anything?
Yes.
Yes, right. Okay.
Jay, just one quick question. So
Yes.
after 168,600, whatever would be our income, the maximum tax we would pay is 31,400, right? Like even if we are earning 400,000 or something, so it would be the same as 168,600, right?
Yeah. So 31,400. No, this is example, right? So $200,000 we have seen example.
Okay. Okay, okay.
Yeah, you are correct. Like here, taxes point of view we have to say. So that means 168,600 into
6.2.
6 point. So maximum towards social security per person per year he will pay 10,453. So maximum
Okay.
either way you can remember in this way as well. So see per person per year how much social security taxes he need to pay? He need to pay 168,600 into
6.2.
6.2, which is 10 453. But here in this case, how much we have paid? So we have paid 200 into 6.2 percentage, which is 12,400. You can do 12,400. You can subtract 12,400 with 10,453. You will get 19,446. So this is the amount which is excess social security withdrawal. You can calculate in this way as well.
Yeah, so whatever would be our level of income, we would pay only 10453, right?
Exactly.
Okay, okay, got it.
So these now this is employee point of view we have seen, but if the same person uh, we have FICA taxes. So this is for employee case.
Jay, one question, Jay.
Yes,
That the maximum limit of 1,68,600.
correct.
Okay, so that is only employee share. We need to calculate 6.2 percentage, right? Employer no
Exactly.
need to.
Employer share, so that differently it will calculate. Like payroll point of view, we can see that differently. But this entire paper one is relating to paper individual taxes. So yeah, so the calculation for business point of view, that is different. We no need to worry on the employer point of view. Okay, clear, Raju?
Yes, yes, Jay. Yeah,
Yeah.
it's clear.
So this is FICA taxes. So if the person is employee, then two contributions we can see. But if the person is self-employed people, can we see two contributions self-employed people? Because self-employed people cases, what is the problem? He's the one employer and he's the one employee. FICA taxes purpose, employer will contribute half and employee will contribute half. And self-employed people cases, who anyone will contribute apart from this taxpayer? No, no one will contribute up. So only taxpayer need to contribute total amount. So the problem here is yeah. So now tell me, so for this, we call it as SE taxes. So the same only, the whatever the FICA taxes we have seen, here we have SE taxes. For that, we need to do some calculation, right? So whenever there is a calculation, definitely we should have a form or a schedule. For calculation of self-employment taxes, we have schedule Schedule SE to calculate self-employment taxes. So when to pay self-employment taxes? So usually self-employed people, we will see his total income and total income, and also we will see his expenses, everything. So balancing, if we have, so total income, let's say $100,000, and also expenses are 99,700. Now income 100 minus expenses 99,700. So balance we call it as net profit. Net profit. So this net profit we have to see. So for calculating self-employment taxes, do we need to see total income? No, it is not required. Expenses? No. We need to see the net profit only. So if the net profit, which is more than or equal to 400, then we need to pay SE taxes. So when SE taxes will be applicable, this is like single line question we can expect. So when to pay SE taxes? If your self-employment income more than of $400 or equal to $400, then we must pay self-employment taxes. And in our case, what is your net profit, which is less than $400? Do we need to pay SE taxes? No. In this case, no SE taxes. Let's say here 99,500. So net profit 500. Do we need to pay SE taxes, guys?
Yes.
Yes, we need to pay SE taxes. Let's say taxpayer total income only $500. Taxpayer total income 100, expenses 99.50, net profit 500. That means taxpayer income only $500. So when we prepare his total income, we will report only 500 total income, and we will get standard deduction, which is per single, let's say 13,850. If taxpayer filing status single, 13,850, we will get standard deduction. So ultimately, no need to pay any taxes. But SE taxes, do we need to pay SE taxes? Yes, we need to pay SE taxes, because the income, self-employment income more than $400, then we need to pay SE taxes. So that is the important thing. Even though you are not paying income taxes, but SE taxes we must pay. So SE tax based on net profit of from the self-employment income. Guys, getting? So where we can see the calculation, we can see on schedule SE. Now the thing is, FICA taxes we understood. So what is the total percentage we have to pay, guys? employee contribution. Guys,
6.2,
employee,
6.2,
how much percentage?
6.2,
6 point.
Plus 1.45.
So what is the total percentage?
7.65.
7.65.
65.
7.65. And employer contribution 7.65. So that means how much percentage we have here? 15.3. Now self-employment cases, the problem is he's the one employer and he's the one employee. That means he need to pay self-employment taxes of 15.3. But if the person if the person is employee and if the same person employer, then usually this 7.65 percentage we can get as deduction. So that means on the net profit we no need to we no need to calculate directly on 15.3. So reduce employee portion and you will get some amount. So on that apply 15.3. So directly we no need to pay 15.3. So let's say we have income of $100 and we need to pay SE taxes, which is 15.3. We understood 15.3 SE taxes we have to pay. SE taxes percentage, how much percentage, guys? So 15.3 percentage, which is SE taxes percentage. Now income, we have income of 100. So do we need to pay 15.3 on directly on $100? No, reduce 7.65 percentage and then apply. So that means here, why to reduce? We will see. For now, just remember this point. And actually, there is a logic removing 7.65. So now remove 7.65. So you will get 100 minus 7.65, which is 92.35. So on this, apply 15.3 into 15.3 percentage. So that means for $100 we need to pay $14.1 as self-employment taxes. So if you can apply, if you can put the percentage here, you will get 92.5. Yeah. So now with this, what we understood. So how to calculate self-employment taxes? So self-employment taxes formula, SE taxes formula equal to net profit net profit into 92.35. This is very, very important. 92.35 percentage into 15.3 percentage. So this is the formula for calculating SE taxes. So guys, whenever you have a question on the self-employment taxes, so how to calculate the SE taxes? Net profit into 92.35 percentage into 15.3. So why 92.35? Because this is whole 100% portion. So usually we will get 7.65% as deduction. So we are not taking deduction now. So that means it is not accurate if you apply directly 15.3. So that's the reason what we will do, employee portion we will eliminate and then we will see the total amount, on that we will apply 15.3. This is clear, guys? Yes or no? Anything quickly, please?
Yes.
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 Let's say taxpayer income $10,000. How much SE taxes we need to pay? 10,000 into, can anyone tell me the formula?
92.35%.
92.35 into
92.35 into
15.3.
15.3.
Into 15.
15.3.
So why we are doing 92.35? Because 100% minus 7.65% we usually have to do, because that is the net amount we have to take. So that's the reason we are taking 92.35 and into 15.3. So 1412.955. So this is the amount we have to pay towards self-employment taxes. So again, this 15.3 calculation, we know the limits like employee portion. That means here employee. So he is the one employer and employee. So now we can sum up this total. 12.4 percentage. So social security percentage in case of self-employed people 12.4, and Medicare how much amount we have, which is 2.9. And we also know this is on social security base. Social, and this is Medicare. Social security per person per year limit is how much percentage, guys? Social Security per person per year limit is
168,600.
168,600. Let's say taxpayer is employee, he's getting some income from wages, and also he's doing some side business, so self-employment income. Now in this case, the problem is here, let's say self-employment income $100,000, and also he's having self-employment income which is $150,000. Side business is high. Now when we calculate social security, you make sure to apply the limit, which is very very important, right? We already know, guys. You are getting this point. So now 168,600, 168,600. So this base limit you have to keep first. So he's working, he's employee, that means employer must withhold social security taxes. That means 168,600 minus $100,000. Balance available, which is 68,600. So we have self-employment income of 150, and do we need to pay SC taxes on 150? No, because we have social security base limit is 168,600, out of which from the employer and we have done withholding, which is $100,000. So on 68,600 only we need to pay social security taxes in case of self-employment income, right? So 68,600 we will apply FICA taxes, AC taxes, social security taxes, which is how much percentage, guys? 68,600 into how much percentage we will apply?
12.4.
Before that,
6
92.35
point. Yes, okay.
into 12.4 percentage here, because he's the one employer and he's the one employee, so we will apply 12.4 percentage. So in this way we have to calculate. Guys, getting this point? And what about Medicare? So Medicare taxes we have to pay on 150. So here into how much percentage? 2.9 percentage. Okay, so let's quickly see the SC taxes.
There one question here. Why are we paying Medicare taxes on the entire amount when that we also paid on
Oh, correct,
68,600?
correct. Into 92.35 percentage into, yeah, let's quickly see schedule SE.
Sir, if the total income is 1 lakh and 1,50,000 for self-employment, it both is less than 168. So why are we calculating tax there?
Can you repeat the question again? I'm sorry, I missed.
So the salary, the wages that he is receiving is 1 lakh, that is less than 1,68,000 limit, and the self-employment income is also less than
Yeah,
1,68,000.
so correct. Like what we discussed. So per person per year, social security base limit is 168,600. It is not on single source of income. It is based on the total earned income. So how much? What is earned income, guys? What is earned income?
Income received for the performance of
Provided.
Income received for
wages.
performing services, we call it as earned income. So on the earned income we have base limit of 168,600. It is not based on, it is not based on the how many, you can see here this is wages, so this is earned income, and this is self-employment income, this is also earned income. So we have limit for earned income, not for individual amounts. So this income and this income, so total which is more than 168,600, so then we will apply the calculation.
So shouldn't it be 168 minus this 2,50,000? That is the extra income.
Yes, that is why we have calculated here. So you are saying 100 plus 150, which is 250, minus 168 600, you are saying, right?
Yeah.
So okay, so on the excess amount we no need to pay, right? Why to calculate in that way? So what we can do, keep 168 600 here, and employee, he worked for the company, so employer will definitely will do the withholding. So when we calculate the base limit, first you give the priority to the wages, because on the wages definitely employer will do the withholding. So that means on 168,600 we have paid on $100,000. So how much still we need to pay towards social security taxes? We have to pay on 68,600 only. So that means out of 150, how much we need to pay towards social security? We have to pay on 68,600 only. Now you're getting the logic, right? Yes, no?
No, sir. So for first one, I got for 1 lakh, he is 1 lakh is his wages. So
Hmm.
168 is the limit. So he'll be paying for 68,600. The second one, if he is earning 1,50,000, so for out of 168,600, he has already paid for 1,50,000. Then the remaining should be
No, no, no. Social
88,600.
Security basically, when we will pay, when we finalize your income tax return, at that point we will pay. So yeah, you let me tell you clearly. So usually employee cases, what we can see, employer will do the withholdings. When it is coming to self-employment income, you yourself have to pay at the time of filing your income tax return, right? So these, right now we have two incomes. One is wages income 100 and we have self-employment income 150. Now when we calculate social FICA taxes, when we calculate FICA taxes, so how much uh, okay, so now take the base limit 168,600. Okay, so 168,600 base limit we have. In this, if the person is employee, whatever the income we have, so straight away we can reduce, because employer have already done withholding. So that means $100,000 we have paid TICA taxes already. Now you have $150,000 income, right? On this, do we need to pay on $150,000? No, because employee have already paid. So he have already paid some TICA taxes while he working for a company, so employer have done withholding for that. Now it is your responsibility. Social security taxes is self-employment taxes, it is responsibility of the taxpayer at the time of filing income tax return, not at the time of earning income. So we have earned the income, but we haven't paid any social security taxes on the same. But on this, did we pay any social security taxes? Yes, we have paid already. Employer have done already withholdings. Guys, getting this point? Nidhi?
Yes.
Sorry, yeah. So you worked for a company, so employer have already done this. You no need to do separately. But this is your income, you earned, and you have to pay at the time of paying or filing your income tax return. Right? That means when we calculate your base limit, first keep the base limit and see how much we have already paid. So this, whenever you have W2, which is wages, that means we have already paid. We have already paid. So did we pay anything on self-employment? When we need to pay? At the time of finalizing your tax return.
So how much we will pay for this 1,50,000?
Yeah. So how much we have to pay? So the question is here on, this is social security, right? So social security taxes, and also we have Medicare taxes. Do we have any base limit for this? No base limit. Now in this we have already paid on $100,000. So but your self-employment income 150. So how much balance still we need to pay? We need to pay on 68,600. So this is your self-employment portion. Self-employment income we will include here. This is wages amount. And Medicare, do we have any thresholds? No threshold. So on 100,000 we have to pay, and on 150 also we need to pay. But here self-employment income, so we have to pay on 68,600 only. That means 68,600 into 92.35 percentage into 15.3 percentage. This is your AC taxes of social security contribution, and also we have to pay Medicare. So on 150 into 92.35, into 15.3%. So these two together,
Jay, it should be 2.9, right?
sorry,
MCT medical.
yeah, 2.9%.
And here as well, the SST, Social Security Tax, I think it should be 12.4.
Correct. Sorry. 12.4%. Correct. 12.4 and here 1 correct. Yeah. So 11,872 we have to pay. You're getting this, Nidhi?
Yes, sir.
Okay.
So because we have a limit for social security taxes for 168, that is
Correct.
why wages, when we have already taken 1 lakh for that same employee for self-employment, we are taking the balance.
Correct. Exactly.
Okay.
So whenever you have a question in the exam, so first apply the total amount on wages because we have already paid on the same. So separately we will not pay because employer will already do withholding everything calculation. So we no need to pay on the same. But on the self-employment portion we have to pay separately. But when they are asking total taxes, then we have to include this 168,600. Okay, so in this way we have to do the calculation, and
Jay,
now, yeah,
so the employer is always withhold both the share, right? Employee share plus employer share.
exactly.
Okay,
Employer will always do the withholding,
both. Okay, thank you.
and okay, so this is also very important, and we were talking about something. I'm sorry, I forgot. Uh, okay, this is done. Okay, so we will see a couple of questions. We will do some calculation. Then you will get to know the clear understanding how when we will apply the limits, everything. But yeah, so for now, SE taxes, SE taxes. What is the form, guys? What is schedule?
89,
Schedule S.
8959.
No, no, no.
Schedule
8959
SC.
Medicare tax.
Schedule
Schedule
SC.
Schedule SE. And what is the percentage? How to calculate SE taxes?
Social Security taxes plus Medicare taxes.
Uh, I
Net,
mean, on what is
net
the
profit.
net profit?
Net
Exactly.
profit
Net profit
multiply by 92.35 percentage.
into 92.35 percentage into
15.3%.
15.3 percentage, which is which if the net profit more than more than or
400.
$400.
equal to
Or equal to 400.
correct, more than or equal to 400, then we have to pay SC taxes. And also this on these we will get 50% as deduction, 50% as we will get deduction, which we called as deductible part of self-employment taxes, deductible part of self-employment taxes. So how much percentage we will get? 50 percentage. That means on the income, we will reduce 50% of the self-employment taxes. So let's say your income $100,000 and you self-employment taxes, which is into 92.35 percentage into 15.3 percentage. So 1412, which is your taxes, which is SE taxes, additional taxes. On this, how much we can claim as deduction by 2, which is 7064. That means your income, this is your income and adjustments to income is your seven. So now your total income, which is your 92,935. So this is your AGI. So see the difference. So this is taxes. So that directly impacts your total tax liability. But this half, which is adjustments to income. So this is a deduction. It will not impact directly on on total taxes. It partially it will reduce. But taxes directly increase your tax liability dollar by dollar, but adjustments to income, which will give some benefit relief only, but it will not reduce your total tax directly. So now let's see the SE taxes. Here you can see first your total income. So again, it should be for 400 or more, then only SC taxes will be applicable, right? So that's the reason you can see in line 1A, 400 or more. So then only this calculation will be there. And also 92.35, we know why 92.35, right? And also if less than 400, stop calculation here. No need to do any calculation, because why? If less than 400, then it is saying stop. That means
We need not to pay any taxes on this
yes, and also
because
this is
income is
this
less
form
than
is
400.
2025. Actually, we have 2024 form as well. So in 2024, we can see here 168. How much, guys?
168
168,
600.
600.
Uh, I will explain you 92.35 later, but for now, just remember 92.35. Whenever we have self-employment income, so we will not pay taxes on directly on 50 on total amount. We will reduce 7.65 percentage. So that means we will apply 92.35. And here this is the limit. Let me show you 2024 uh SC schedule, SC form. Yeah, we have schedule SC 24, correct. You can see here 168 600. From where we are getting this 168 600, guys? This is the limit, right? For social security base limit, which is for 2024, which is 168 600. And also you can see here multiply by 12.4 percentage. What is 12.4 percentage?
Total security, social security
Social
tax.
Yes.
Security.
And also 2.9
Medicare.
Medicare
Medicare tax.
tax.
Medicare. And also deduction for one half of the self-employment taxes. What is this?
That 50% of
Yeah. So
SC
that
taxes.
50%. So where we can see this?
Jay, can you explain once more the deduction one half of self-employment tax?
Yeah. So whatever the self-employment taxes we have, just calculate the total self-employment taxes. Okay. And now what we can do, 50% of the your self-employment taxes. So let's quickly open schedule 1 form 1040. Okay, so let's say we have calculated social security taxes, uh, sorry, self-employment taxes $10,000. Okay, how much
Okay.
self-employment taxes, SC taxes? $10,000. So half of this amount, like how much half of this amount? $5,000.
5,000.
This $5,000 we can claim as adjustments to income. That means you can reduce 50% from your total income, because see, so think about business point of view. Business point of view, $10,000 which is your expenses, right? So expenses cases, what we can do, we can claim it as expenses. We can claim in the expenses list. So $10,000 expenses, your expenses are employer expenses or employee expenses. This is total expenses. Now if you the person is employee, his contribution basically we can claim as deduction, which is in the business point of view, payroll taxes with regards to the employee contribution and employee contribution we have, right? So employer contribution we will claim it as expenses in the books of accounts, payroll taxes. So same way here, he's the one employer and he's the one employee, so we will not give direct benefit. Instead what we can do, employer contribution we can claim as deduction, I can say expenses, but not directly. So where we can claim on schedule 1 of 1040 part 2. You can see here deductible part of self-employment taxes. Anyone can see where deductible part of self-employment taxes? What is the line?
Line 15. Line
Line
15.
15, deductible part of self-employment taxes. For this, what we need to attach?
Schedule E.
Schedule
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 SC.
SC.
Schedule SC for
Self-employment.
Self-employment
self-employment
taxes.
taxes. So this is the flow actually. Okay, and also this $10,000 which is additional taxes, right? So additional taxes, usually we have a schedule called schedule 2 of 1040, schedule 2 of form 1040 for additional taxes. So in this we have part 2 line number 4, which is self-employment taxes. So you will enter 10,000 here and 5,000 here, 5,000, and this total information we will enter here, 10,000 here and 5,000 here. Guys, getting?
Yes, yes.
So here 5,000, which is adjustment income, and total taxes, additional taxes. So we will enter in schedule 2 of 1040 part 2. These are the calculations we can see. So whenever you have self-employment income, what are the schedules we have to prepare? So when we have self-employment income more than $400, first schedule where we can see the different impact, we can see on schedule SC, and only schedule SC. No, we can see the numbers in the schedule 1, and also we can see schedule 2 as well. Guys, getting this logic flow?
Yes, yes.
Yes, I can see, I can hear only one answer. Others,
Yes,
guys?
Jay.
Yes, sir. Yes, sir.
Good morning, everyone.
Good morning.
Good morning.
Good one.
So, we understood self because why I'm stressing more on this, because we already out of timing, but still why I'm telling, because IRS love to test on this, because IRS favorite area. So whenever you in your exam, mark my words, you will definitely will see this question for sure. So only the thing, they will change the numbers, that's it, because this calculation 92.35 and understanding 168 600 is very 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 important. While we preparing the tax return, I have seen my, I will tell you, I will show you one tax return tomorrow or day after tomorrow. I will open a tax return and I will just enter the numbers, just see the difference, where we can see additional taxes, what is the tax liability. In that way we will understand. But for now, if you can understand this, then I will show you practically how this will work. And yeah, and also next important area, constructive receipt of income, which is very important in the exam. Constructive receipt of income. With this, what we understood FICA taxes, we understood SC taxes, and deductible part of self-employment taxes we understood. And quickly we will come to conclude one more point. Let's say SC self-employment self-employment income, let's say $10,000. Can anyone quickly calculate? SC taxes? Or tell me the formula how to calculate SC taxes quickly.
10,000 into
10,000 into
92.35
92.35 into
into 15.
15.3 percentage.
Into 92.35 percentage into
15.3.
15.3.
15.3 percentage. And this is your SC taxes. And deductible part of self-employment taxes,
50% of SC
14.12
taxes.
into 15%. 50 percentage.
where we can see this, guys. Just tell me the schedules.
Scheduled SE.
Schedule SC. Only schedule SC.
And
Scheduled
schedule one.
SE along with Schedule 2
Schedule
of
1 or 2.
Schedule
Schedule
one.
2.
SC taxes. Schedule 2
Schedule
for
2.
Schedule two.
additional
Oh,
taxes.
two.
Schedule 2. And this one, deductible part of self-employment taxes divided by 2, correct? Which is 50%. So where we
Yes.
can see schedule AC,
Scheduled
Schedule
1
one.
of how many?
schedule 1.
Scheduled 1.
1.
Part 2.
Part 2. Both are part 2s, correct? Now, another important area on the same part, schedule 1, part 2. Let me show you this. You can see one more important line item, which is deductible part of self-employment we have seen, and self-employed health insurance deduction. This is very important. These two you will definitely will see question on the same deductible part of self-employment taxes and calculation of self-employed health insurance deduction, also very important. So now we have income of $10,000. On this, how much we have claimed as deduction? So on $10,000, how much we have claimed as deduction, guys? Self-employment income 10.
706.
How much your deduction?
706.
706.
4773.
So 10 minus 706, which is your 9293, which is balance available for self-employment health insurance. Balance available for self-employed health insurance. If you want to take any insurance, you can take, but how much limit we have? We have 9293. So taxpayer would like to take on $10,000. SC health insurance, self-employed people would like to take, this taxpayer would like to take $10,000. So can we claim? He can take, but can we claim?
No, up to 92
Because
3
we have
9.
balance of 9293 only, so that means we can claim as a deduction in the schedule 1 part 2 up to self-employment income minus deductible part of self-employment taxes. The formula for calculating maximum self-employed health insurance formula, so maximum allowable self-employed health insurance, what is the formula, guys? Self-employment income, minus deductible part of SE taxes. So this is the formula. So in the exam, you may get a question directly. So they will give you SE income, which is self-employment income, which is $10,000. How much we can claim? How much amount we can take as social self-employed health insurance? Self-employed health insurance. So how much we can take, guys? So in the answers, 10,000, and this is one option, and another option 0, and another option 9293 around, and another option I can say which is 5,000. So how much we can take, guys? Self-employment income, taxpayer self-employment income $10,000.
92 93.
Taxpayer self-employment income $10,000, and he would like to take self-employed health insurance. So how much he can take? So option A 10, option B 0, option C 9293, option D 5,000. How much we can claim?
Option C 92 93.
Option C. So what is the formula for self-employed health insurance? SE health insurance. Guys,
SC
quickly.
income minus deductible part of SC taxes.
Minus deductible part of SE taxes. So self-employment income 10, okay. And how to calculate deductible part of self-employment taxes? We just need to calculate SE taxes first. So how to calculate SE taxes? So $10,000 into 92.35 percentage into 15.3 percentage. So which is your 1412. So divided by 2, which is 706. That means 10,000 minus 706, which is 9293. So option C. IRS love to test on this area because this is simply by the one line question only, but in the back end we have to do this calculation, right? So many of you may miss to calculate deductible part of self-employment taxes on a hurry. You usually will select 10,000 directly. So IRS also wants that same. So you have to take 10,000, but answer is 9293. Guys, getting this point? Yes, no, please, anything?
Yes.
Yes,
Yes.
right. So now deductible part of self-employed, here we can see okay. So whatever that means, simply you must remember one formula. Self-employment health insurance deduction formula equal to, what is the formula, guys? Can anyone tell me?
Self-employment income minus deductible part of self-employment taxes.
Deductible part of SC taxes. Okay, that is the formula. You must remember the formula. So whenever you have time, whenever you are revising, just write all these formulas. This formula is very important. And also next one, constructive receipt of income. So constructive receipt of income. So what is constructive receipt of income? So constructive receipt of income means which uh, in accounts or taxes, like we have two method of accounting. So one method of accounting, which is cash method, and another one accrual method, and also we have hybrid method, which we can see in the farming income, which is mix of accrual and cash. But many of the cases we can see only two. One is cash method of accounting, and another one accrual method of accounting. Now, in simple example, accrual method of accounting means we will recognize it as income irrespective of the cash. So let's say we have sold around $100,000 value goods. we have sold 100,000 value of good, $10,000 or 100, okay, 100,000 value of the goods. We sold you, taxpayer having a business, and the business, he sold 100,000 value of the goods, and the debtor saying he will give the money in the next month. Now, he sold the goods on June 2nd and December 2nd, let's say December 2nd in 2024, and the debtor saying he will give the money on Jan 2nd of 2025. So he will get the cash, the taxpayer will get the cash on January 2nd, 2025. Now, for income tax purpose, if taxpayer is following accrual method of accounting, so do we need to recognize $100,000 as income? No, it is not income because we are following accrual method. Sorry, here we will recognize as income. I'm sorry. Here we will recognize it as income. So in the 2024, we will recognize this $100,000 as income. So did we receive cash really? No, we haven't received any cash in 2024, but still we will recognize it as income in the 2024 itself because we follow accrual method of accounting. In the accrual method of accounting, no matter what, irrespective of cash, if we have done the transaction, that's it. So there only we will recognize it as income irrespective of the cash. So now we have cash method of accounting. In this, let's say the same numbers, the cash method of accounting, we sold the goods on December 2nd, 2024, value $100,000. And now, did we receive cash in 2024? Do we need to consider it as income? 2024 and 2025. In 2024, no income because we haven't received any income. So here, no income. And 2025, yes, we will report $100,000 as income because we received the cash in 2025. So in the cash method of accounting, we usually will see for cash when we have received the cash. But accrual method of accounting, do we need to look for cash? No. If you do the transaction, then we will recognize it as income immediately, irrespective of the cash. So these are two method of accountings. So any questions or any confusions in this? If no question, I will explain you constructive receipt concept. This is very important in the exam. Constructive receipt of income. This is clear, guys?
Yes.
Yes, right. So if you are from accounting background, then we know all this, right? And constructive receipt of income, this we can see the concept we can see only in case taxpayer follow cash method of accounting. If taxpayer follows cash method of accounting, then only we can see constructive receipt of income. If taxpayer following accrual method, do we need to see constructive receipt? Can we see the constructive receipt concept?
No.
No. So constructive receipt concept we can see only in case if taxpayer following cash method of accounting. So this is kind of doctrine, or I can say it is a law. The constructive receipt doctrine applies only for cash basis tax payer. So in cash basis, what we see, we will see whether we have received cash or not. If we receive cash, then only we will recognize it as income. The problem here is some cases taxpayer, let's say here January 2nd, 2025. Okay, I will add one more point here. On the same date, on the December 1st itself, on December 2nd itself, 2024, taxpayer had given a check, and on the check we have a date Jan 2nd. So this is one case, and another case we have received a check and on this dated December 2nd. So can we see any difference here? So check, Indian check spelling is different and US check spelling is different. So USA they will write check CHECK only. In our here we write CHEQUE, right? Check. This is check spelling in India.
Yeah.
This is check
Yes.
spelling in USA. So in USA we write check CHECK only. And now, can you see any difference here? So do you know check, guys? check is nothing but banking instrument where you can collect the money, same like any other. Yeah, it is a kind of banking instrument where we can this we will use for collecting money or transferring money from one account to another account. We usually use check previously, but nowadays we use UPI. So within seconds only we will do the transaction. But previously, so we had ATM cards, and many of you might be using ATM cards and checks. So I had used checks for my whenever when I was in Chennai, I do use checks. Yeah, and now this check dated first case January 2nd, 2022, and second case check dated December 2nd, 2022. This is sorry, December 2nd, 2024 here, and here 2025. So here we have difference actually. The difference here is in the first case we have we sold the goods on December 2nd, 2024, and in here we have restriction. Here we have a restriction. What is the restriction, guys? The restriction is you cannot encash the money on December 2nd itself. When we can encash the money? We can encash the money on January 2nd, 2025. That means we have a restriction to collect the money. So do we have any restriction in this case? Yes, we have restriction in this case to collect the money. Yes, we have restrictions to collect or encash the money. But in the below case, do we have any restrictions, guys, to collect the money? So can I collect on December 2nd itself? Yes, I can collect on December 2nd itself. I sold the goods on December 2nd, and I got the check on December 2nd, dated itself also December 2nd. Okay, guys, getting the difference? So do we have any restrictions? No restrictions here. Guys, yes or no?
Yes, yes.
So
Yes,
in the
sure.
first case, you can see I sold the goods on December 2nd. I got the check, but the check dated January 2nd, 2025. That means to encash the money, I had to wait for some more days. I need to wait for 1 month. But in the second case, do I have any restrictions to collect the money? No restrictions. And the check dated itself is December 2nd itself. If I want to take the money, I can take money now. Or if I want to take money on January 2nd, I can take the money on January 2nd in the second case. But first case, I need to wait till January 2025. That means we have restrictions. So to consider it as income in the current year itself, so we have to see whether we have any restrictions or not. So first case, do we have restrictions? Yes, we have restrictions. So can we consider it as income? No, we no need to consider it as income immediately. So when to consider it as income? When you don't have any restrictions, then only you consider it as income. So on January 2nd, do we have any restrictions? No restrictions on January 2nd. So you consider it as income on January 2nd. Second case, do we have any restrictions? No restrictions. So can I consider it as income on December 2nd? Yes, absolutely. Because if you want to collect the money on December 2nd, you can collect on December 2nd itself. So no restriction in this case. So to consider a constructive receipt of income, so which means to consider it as income, so constructive in this case, usually income is taxable when it is actually made available to the taxpayer. So in this definition for constructive receipt of income is taxable when it is made available to the taxpayer. That means without any restrictions, then it is income. And the even actually if you receive, so did we receive actually here? No. So to collect the check, what we have to do? You have to keep the check in the bank, and it will take 2-3 days time. So that processing time we have, right? So it doesn't matter. So in case of in this case, let's say we have received check on December 2nd dated 2024, but I deposited on Jan 1st 2025. That means I have collected money on next year. Now when we have to consider or recognize it as income? So 2024 or 2025? Guys, second case,
24.
Second case, what happened? Check dated December 2nd, 2024, and also deposited deposited on January 1st, 2025. That means it is your wish. Like if you want to deposit now, you can deposit now and you can take the money. And if you deposit in next year, that is your wish. Like for IRS purpose, it is you have received already income, you pay tax now itself. Don't wait for till 2025 because there are no restrictions to get the money, to collect the money. So why you will wait for next year till, so there is no logic, right? So that's the reason IRS had introduced one something called constructive receipt of income. So that means you must recognize it as income in the current year itself only if you don't have any restrictions to encash the money. So that's it. So that is the definition for constructive receipt of income. So this week generally can see in cash method of accounting, and income is taxable when it is made available to the taxpayer without any restrictions. So then we will consider it as income in the tax in the same year itself. Clear, guys, this point?
Yes.
Yes, right?
Yes.
Okay. So one more point I'm adding here. If taxpayer can take money and there are no significant restrictions, it is taxable. Okay. And also income, like let's say we have Mr. X and he's having some franchises. He's having some franchises. And also we have Y, he's our customer, our debtor, I can say. Now he had we have one person in between Z, so he is actually agent of X, agent Z, agent Z who work for Mr. X. Now he is in Texas and he is in New York. Okay, so taxpayer will not go New Texas to collect the money. So he sent Mr. C to Mr. Y to collect the check. Now, now who received the check actually? So agent received check and on behalf of taxpayer itself. Now we have received check. Mr. Z received check on December 31st, and Mr. Z, Mr. Z had given the check to Mr. X on January 1st, 2025, 2024. Now, when to recognize it as income? X actually have received on January 1st, but Z have received on December 31st. So it is income in 24 or 25.
December 31st,
24.
2024.
December
24.
December 31st, 2024. Because even if income received by agent also income only, income to the taxpayer in the same year. So this is also very important. If the income received by agent, it is also received by the taxpayer in the same year itself. Okay. So this is agent rule. So the IRS favorite area. If income is received by agent, it is considered received by the taxpayer in the same year itself. Okay. This is clear. And also you make sure to see in the exam or any questions, there should not be any demands. So unqualified demands. So which means unrestricted access without conditions. So if unqualified demand, then it is taxable. So which is constructive receipt of income. Okay. If there are any restrictions, do we need to apply constructive receipt of concept doctrine? So if there are restrictions, can we apply the constructive receipt or doctrine? No. Constructive receipt of income apply only cash method and there are no restrictions. If any restrictions, do we need to apply? No, not at all. Right? Clear, guys, this point? And now
Yes.
tell me, bonus credited but not payable until next year.
Not
So
applicable for constructive receipt of.
why?
Because it
Because
is a
it is a
condition not
condition.
payable till next year.
Correct. So do we need to apply constructive receipt concept? No. So funds held in escrow with condition. So can we apply constructive receipt of concept? Escrow, which is nothing but it is a kind of, uh, understand, like it is kind of account, so where they will manage your funds. Whenever you give instructions to them, they will manage. Like let's say this we can see in home mortgage interest cases, we can see the escrow. So you can keep some money in the escrow as well, and you can keep some money in the bank as well. And escrow, what they do, if you give any instructions to pay any money to your real estate taxes or any home mortgage interest, then they will pay from the account. Okay, now you have some funds in escrow and with a condition. So is it income?
No,
No.
Because
No.
there is some
It
condition
is
relating to escrow.
condition, right? So condition cases we will not recognize. Employer delayed payment due to contract terms. So is the, can we consider it as constructive? Can we apply the constructive receipt concept?
no.
No,
Because
Payments are delayed.
okay, okay, due to contract
Contract
terms,
terms.
because there are some uh, restrictions, right? So in case of restriction, then we will not apply. And also we have another doctrine which is economic benefit doctrine. So economic benefit doctrine, so which is little bit different than constructive receipt. So economic benefit doctrine, which talk about um, first one, this we can see in case of trust cases, we can see this. There is two terminals, which is revocable and irrevocable. So revocable and irrevocable. So anyone know what is the difference between revocable and irrevocable? Does anyone know what is revocable and what is irrevocable? Revocable means which we can take back, which we can take back. So, and which we cannot take back. Let's say you have given your mobile to your friend for temporary purpose. So can we take back whenever you want? Yes, definitely we can take. Or you have given your mobile to your friend as a gift. So will you ask again?
no,
I will ask. You will not ask, but I will ask. Say, okay. So usually, if you give anything which is, you cannot take back, those are irrevocable. And if you can take back at any point, so that means you have complete control on the same. So you have complete control on the same. But here, in case of irrevocable, do we have control on the same? So here, control will be there. So control will be there to the giver. Can we see any control here? So no control will be there to the giver. Okay, so this is the difference between revocable and irrevocable. And now, when someone, assets, some assets are set aside in a trust, in a trust or any funds which is irrevocable, 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 and also it is used only for taxpayer benefits. And in this case, if you have any restrictions, if you have restrictions, if you have restrictions, like let's say, we'll see one example. In this case, this we called as economic benefit doctrine. Who ultimately will get the benefit because it is irrevocable. So the payer will not take will not he cannot take back, and also he cannot have any control, and also the benefit only to the taxpayer. And even though we have restrictions, but still fine, you consider it as income. Okay, so the above one, consecutive receipt is different and economic benefit doctrine is different. So in this case, economic benefit doctrine cases, we need to recognize it as income because we set aside money permanently and we cannot take back. So let's say we have taxpayer Mr. X and we have Y who is a son, and now X had created a trust and he set aside money for him, and which is revocable or irrevocable. So we have irrevocable trust. He have created irrevocable trust, and now Now his age is 18, his age is 17 years. So we have a restriction which is, the buy cannot take money until he attains age 22 years. So we have a restriction. So is it restriction matter in case of economic benefit doctrine? No. Economic benefit doctrine cases, we no need to look for the, restriction. So here X case, what happened? Uh, X had set aside some money for a irrevocable trust to taxpayer Mr. Y, and uh, and also who will get benefit? Only Y will get benefit. In this case, whatever the benefit we have received, which we called as economic benefit doctrine. Okay, this is clear, guys. Yes, no, guys, are you there?
Yes.
So forget about no need to worry on the economic benefit. You can just you can just read one more time, then you will have clear idea. But to consider it as economic benefit doctrine, first thing, asset should be set aside, and also it should be used only for taxpayer, and it will be taxable even if not currently accessible, also taxable. But constructive receipt, that is, if we have any restriction, then it will not be taxable. So that is difference between constructive receipt and economic benefit doctrine. Next one, uh, prizes or awards. So we will quickly complete this, and then we'll try to complete the remaining important areas in the tomorrow session. Okay, declining a prize or award. Like, let's say taxpayer, uh, like he participated in a in a quiz or something, and he will get one prize. So what happened? Taxpayer declined the prize. Now he he actually received or not? So he hadn't received actually. So he have done? So taxpayer refuses or declines a prize. So in that case, will it be income to the taxpayer?
No.
Because
No.
He has declined.
no receipt, no income. Because no receipt, no income. Another case, he actually received the prize, so he have received and he had donated to someone. Now it is taxable or not taxable?
Or taxable.
Taxable.
It is taxable. So once you receive, then it will be taxable. If you haven't received anything, then it will not be taxable. So if you eligible to get a prize and you decline the prize, then it is not taxable. You eligible to get the prize and you received the prize and you donated the prize, then the receipt is taxable, and donation you can claim as a deduction and the schedule A. So that is different. But if you in to consider it as income or not, first thing what we have to see, whether you actually received or not. If you received, then taxable. This is clear, guys.
Yes.
And
Yes,
if
yes.
if a prize awarded and you if a prize award, if prize or award is accepted, then it will be taxable. So at what price? So price will be fair market value. Fair market value, which is, the definition of fair market value, I can say, so there will be like two persons, one willing buyer and willing seller, and both should have knowledge on the product. So willing buyer, we have to see willing buyer and willing seller, and both should have complete knowledge on the product, and it should not be any forced. So like someone should not sell forcefully. So both should have knowledge, and both are willing buyers and willing seller. So if one person is forced buyer, then it is FMV? No. So both taxpayer, I can say buyer and seller, should be willing and have knowledge on the product, and they can change the price, you know, if I mean, the the price between these two persons we call it as fair market value. So fair market value, I can say, the price at which property would change between willing buyer and willing seller with full knowledge on the product, and neither one should be forced to, sell or buy. So in that case, we call it as fair market value, which is arm's length transaction. So arm's length transaction, which is So arm length transaction, which is in the fair market value, we can see, and they both agree the price, and both are no one neither forced to act. So that is also important. So in that case, we can say it as fair market value. So which is, I can say, market value. Okay. So market value, which means both willing buyer and willing seller should know the product, and no one will be forced to sell or buy the product. Okay. So whenever we don't know the product value, we will apply the fair market value. So in this case, you have received a prize or award. So do we know, do we have any cash transaction in that case? So if there is no cash transaction directly, then apply fair market value. Okay. So no
I have
cash.
a doubt.
Yeah.
Gee, if a price is received, then donated, received is treated as income and donated is treated as adjustment to income. Is that like?
Yes. Schedule A. Donation, basically we have 60% limit and 50% limit. Like if it is
Oh,
non-cash, then it is 50%, and if it is cash, then it is 60% limit up to age. So those we have. Okay.
oh,
Non-cash transactions, basically we have to see the fair market value of the property. Okay, this is clear. And now what we understood, constructive receipt applies to what type of taxpayer, guys? Cash or accrual?
cash basis.
Cash basis. And also income is taxable when there is any
Cash
restrictions
basis.
or no restrictions.
No restriction.
Sir, if
Without any
it,
restrictions. And also income received by agent equal to
Income received by the TP.
taxpayer. And also substantial restrictions. If you have any substantial restrictions, so it is taxable or not taxable?
Not taxable.
Not taxable. Declining price, taxable or not taxable? Declining
Non-taxable.
price, not
Not
taxable.
taxable.
Not taxable.
Accepted price, so taxable or not taxable?
Taxable.
Taxable.
Taxable at
Fair market value.
fair market value. And also economic benefit applies when it is revocable or irrevocable. Economic
Irrevocable.
irrevocable, and
Irrevocable.
also money should be set aside. Asset money or something should be set aside. Then only so these are the points we have seen so far, and also we will understand one more point quickly. Claim of right doctrine, which is also important. Claim of right doctrine. So the two doctrines we have seen. One is um, economic benefit doctrine we have seen, and also constructive receipt doctrine we have seen, and claim of right doctrine. So three total. So total three doctrines. Doctrine is nothing but a law, I can say, rule, I can say, economic benefit, and also one more doctrine. Anyone remember? Constructive receipt. Constructive receipt. So in this case, no restrictions. And also economic benefit, what we have seen,
Irrevocable.
Revocable.
irrevocable,
Funds are kept aside.
only to taxpayer, funds or assets set aside. And now claim of right doctrine. So basically, claim of right doctrine applies, uh, you know, when we are actually giving back. So you have already received some money and you paid taxes on the same. Now you are giving back. So in that case, what we have to do? Let's say we have received wages. Uh, we have received 2023. We have received some wages, which is around $100,000, and now taxpayer in 2024 employer asking to pay 10,000 back, which is wrongfully employer had given. So now employer asking him to pay back this $10,000. So now what you will do? we have filed the tax return. We have already filed the tax return for the same. Now, how you will do it?
We can show 10,000 as an expenses on the same schedule.
Okay. So in case of uh in case of these situations, we have a doctrine which is claim of right doctrine. So which basically in generally how we will understand, we are paying back, right? So in this case we can amend the previously filed the tax return, so we can do that, but generally we cannot do that because we have a claim of doctrine. So in this case, what exactly we have to do, you no need to amend your previously filed tax return. No need to. mm, we shouldn't we shouldn't we shouldn't amend the tax return. So instead, what we have to do, whatever the amount you are paying back, apply the effect in the whenever you are paying the amount back. So you must apply the effect in the whenever we are paying. So now in this case, we have to you have to apply the changes or effect in the 2024 itself, not in 2023. 2023 have already filed. Don't do any changes to 23. Now, whatever the amount we are paying back, then adjust or do the changes in 2024 itself. Now, first case, we have to see the total amount. The total amount, repayment amount more than 3,000 and less than 3,000. Repayment amount less than or equal to 3,000, and another case repayment amount more than 3,000. So you make sure to see the limits. So repayment amount more than 3,000, which is for this we have IRC code. For this we have IRC code section 1341. 1341. Under this section we have two options. Option one, option one, option one, deduction. Option two, tax credit. So deduction, if repayment done in the current year, whatever the amount you have paid, so reduce the same amount on the same source of income. Like let's say 2024 we have income which is wages of $150,000, right? So now how much we can show wages? Current year wage is 150 and you're paying back $10,000. So you can reduce this $10,000 from total wages. So your wages will be 150 minus 10, which is $140, which is wages. Guys, getting this point? This is option one. When we will apply option one? When we will apply option one, deduction, the repayment more than $3,000, then we will apply option one, which we can claim as deduction directly. This is clear, guys? Say yes, no, anything, please.
Yes.
And option two, we can claim a credit. So credit is, which will reduce the tax liability. Credit will reduce tax liability. In the above case, what we have done, we have reduced from income. That means it will not reduce tax directly, but proportionately it will reduce. So $10,000 we have reduced. And now option two, we can claim a credit which will reduce the tax liability. Now, how to calculate the credit? So this credit usually we can claim on schedule 3. So credits we can see in schedule 3. So schedule 1, additional income and adjustments to income. Schedule 2, additional taxes. Schedule 3 for credits. Okay. Schedule 3 for credits. Now we can claim credit. So how to calculate the credits? Calculations and all not required. Let's see. $100,000 we have paid around 10,000 tax. Okay, guys, you're there, right?
Yes.
Yes, Jay.
Yes, right. So for $100,000 we have paid tax of 10,000, and now we are paying this back $10,000. So that means for 10,000, how much we could have paid tax? Like how much we can save the tax? If you reduce the 10,000, if you reduce the $10,000, then how much we should have actually pay? So on 90,000 we could have pay. That means 9,000 we could have pay.
10,000.
But instead, what we have done, we have paid
10,000.
10,000. So that means excess tax paid. So because of repayment, how much we have paid excess? We have paid excess of $1,000. This $1,000 you can take credit now. So you can take credit. So for this we have definition: claim a credit equal to the tax increased caused by including the income in the prior year. So no need to remember the definition, but how we can do? We can do in this, this is the definition. Claim a credit equal to the tax increase caused by including the income in the prior year. So that is what we have done, right? So we have seen with the additional amount because of this $10,000, how much we have actually paid. We have paid $1,000. Then this amount you can take as a credit in the current year. Option 1 and option 2. This is clear, guys.
Yes.
So where we
Yes,
can
clear.
take the credit? We can take credit in schedule 3 of 1040. And so taxpayer may claim credit if the result is less taxes. Like ultimately, if option 2, when he will take, if it is getting more benefit, then he will take the credit. And what about less than or equal to 3,000? So more than 3,000, we have section 1341 doctrine saying option 1 and option 2. Option 1, take it as deduction, and option 2, take it as credit. So credit concept, what we require prior year information. When we are preparing practically, how we will do? We will plug in the prior year information in the software, and in that way it will calculate it will give the output. So in that way practically we do. But theoretically, like it's practically simple. Like we just need to plug in the information. That's it. The software itself will calculate. But theoretically, we need to understand the logics. Okay. Now, when the amount is less than 3,000, then the problem will come into picture. So this 1341 will not apply. So 1341 section will apply when when we will apply section
More than
1341.
3,000.
When the
More
income
than
more than 3,000, then section 1341 will come into picture. But section 1341 will not applicable. No IRC code 1341 in case less than or equal to 3,000. So in this case, what are the options available? So if repayment less than 3,000, no tax credit. So credit option is available only if section 1341. So option uh, less than or equal to 3,000, no credit, no tax credit. So in the more than 3,000 cases we have seen credit, right? So here no tax credit. And also uh, yeah, so here also we can take deduction, we can take deduction, um, we can take deduction only. And that deduction also we have to see two things. So first thing, is schedule C item or not? Schedule C item. So the repayment, whatever you are giving, so that is related to Schedule C, which is self-employment income or not. Okay, guys, getting this one?
Yes.
And if it is other than, if it is other than Schedule C, other than Schedule C, then other than Schedule C, no tax benefit, no deduction, no credit. That means no deduction and no credit. So first thing, less than or equal to 3,000, what we have to see? Obviously, we will not get any credit. That is for sure. And only deduction, that too, only for Schedule C item. Other than Schedule C item, can we get any deduction? No deduction, no credit. So that means we have to lose your money. Because on 3,000, how much hardly we will pay? On $3,000, 3,000 into 10%. So $300. So IRS won't because any like if less than or equal to 3, we have threshold. Like let's say it is $1,000, then hardly we can save $100. So IRS won't give any benefit for those cases. So simply, if it is Schedule C item, then you can take deduction in the same Schedule C only, and deduction only for Schedule C. So other than Schedule C, can we get any deduction? No. Like let's say we have wages. So wages 2023 wages we have received $100,000, and 2024 you are repaying amount of repaying amount of $2,000. So what is the impact? Like how we will apply this doctrine? So for this, first thing, it is less than or equal to 3,000 or more than 3,000, which is less than or equal to 3,000 case. So shall we apply IRC 1341? No IRC 1341.
Yes.
So what are the options available to taxpayer? Option first one, Schedule C item or not. So no schedule, it is not a Schedule C item. It is not a Schedule C item. So can we get any deduction or credit? No deduction,
No.
No deduction.
no credit. That's it. So in this case, we need to pay 2,000 to the taxpayer. We have paid already tax on the same, so fine, no worries. So you will not get any deduction and you will not get any tax credit benefit because that amount is less than or equal to 3,000. If it is other than wages, if it is like I can say Schedule C item, which is self-employment income, self-employment cases, then
Schedule
There
C.
is a deduction, so we can apply deduction.
yes, we can claim in the Schedule C as a deduction. That's it. So this is about what is the doctrine, guys? Anyone remember this doctrine?
Claim of right.
Just amend the
Claim of
tax
right.
return.
Claim of right doctrine. So now how many doctrines we have seen? So one is
Constructive receipt.
constructive receipt, another one,
Economic benefit.
Economic benefit doctrine.
and
Claim
Claim
of
for
right.
right doctrine.
correct. So now I will give you one information. Just tell me. So over 3,000 and also income type amount is okay. Income type. So here any income. So now tell me what is the tax treatment? How you will deal?
IRC 1341 is applicable.
Okay.
Two option. First option is to take tax credit or deduct it.
Option 1 or 2 we will apply. So which one you will take?
Tax credit.
So whichever is giving more benefit, then you will take. So we have to see whichever is giving more benefit. Whichever is giving more benefit. So this one. And also 3,000 or less, then 3,000 or less. So again, immediately you have to ask one more question. What is the question, guys?
Is related to Schedule C or
Yes.
not.
Exactly. Business income or not. So if it is business income, then
Schedule C deduction.
so if it is business
Deductions.
income, deduct on Schedule C. And if it is wages or unemployment, then
No deduction.
No
okay,
deductions.
no deduction, no deduction and no credit. No
No
deduction
credit.
and no credit. And also, do we need to amend prior return? Don't amend
No.
ever. So whenever we are preparing tax return, you might be, thinking to amend the prior year tax return. So don't ever amend prior year tax return. IRS will, you know, IRS may accept for now, but whenever they find this kind of situation, then they will ask you to amend the tax return. They will send a CP 2000 notice. So a lot of things they do. So prior year tax, prior year return. Okay, so this summary table is very important. Okay, if you have time, you can write the table. If you don't have time, just take this screenshot, and this table definitely will be helpful in the exam.
Jay, if there is no specification on type of income, so we
Hmm?
can treat it as IRC 1341 will apply. The
Uh,
first case.
First case, yeah. So there is no here. We no need of any specific specific income type.
If
Income,
yeah, it's more than
income,
3,000.
income doesn't matter.
Okay.
So claim of right doctrine we have seen. So income received without any restrictions, which is claim of right, right? Correct? Any mistake in this?
Yes. No.
No,
Yes.
no.
Repayment handled in the year of repayment. So whenever we are paying, then only we will apply this repayment. And also over 3,000, what we have seen, section 1341. So and
1341.
And also where we can see the credit, guys? Credit.
Schedule 3.
Schedule 3. And under 3,000, do we have any credit?
No credit.
Only
Only deduction.
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 And also wages
Schedule
under
6.
3,000, no deduction.
No deduction, no credit.
And never amend pre tax return because of the repayment. You can amend the tax return, but not because of the repayment. So if it is because of repayment, don't amend. Okay. And also, we have seen self-employment. Yeah. And when to pay self-employment taxes more than or equal to 400, then we have to pay self-employment taxes. And also, if the person is employee, he will get one document from the payer, which is wages W2 statement. And if the person is self-employed people, self-employee, self-employed people, then he will get one document which is 1099 NEC. This is also very important. 1099 NEC we will get when the income more than, anyone remember this threshold is very
600.
600.
600 or 600 also. If it is 600 also, it is responsibility of the payer to generate this 1099 NEC. Now let's say taxpayer income $100,000, his expenses 99,900. So in this case, do we need to get will we get any NEC document? Will we get any NEC document in this case?
No.
Sure.
Yes, it is 100.
This is income. This is expenses. This is net profit. So
May get, but it's
Yes,
not
we'll get.
mandatory.
we definitely will get the, because here it is talking about gross income. It is not about the net income. So self-employed, whenever we are receiving income, so here itself we will check whether it is more than 600 or less than 600 per person. So this is per person, that too not individual persons, only business people. So whoever is preparing business people only we will see. Like let's say you went to USA and you purchased one product from a store, and which is product value $1,000. You will generate 1080 NIC and you will give the 1080 NIC to the taxpayer. No, you cannot do that, right? So but if the same person, you having a business, okay, so you having a business and you purchased value of $1,000 for your business purpose, then you will be generating 1089 NEC. That is not actually for purchase of items. That is for services, independent contracted cases. We will see that NEC document. Okay, so yeah, self-employed people, we will get 1089 NEC. If the income more than or equal to 600, then we can see this 1089 NEC. Like let's say I have received $100 income, no 1089 NEC, no 1099 NEC. These are source documents. So that means whenever we have a source document, that means the same information will be given to IRS and the same information will be given to the taxpayer, and even the payer also will keep a copy. That means you cannot escape from paying taxes. IRS also having information, taxpayer also have received the document. That means the same information had communicated with the IRS, then you cannot underreport your income. That is actually the intention of reporting the source document. So the source document, when we have NEC less than here case $100, no NEC we have received, but it is optional. Some, if taxpayer want to prepare, if the business people want to give NEC, then they can give. It is optional of the payer, but when it is mandatory, when it is more than 600, then it is mandatory. Now we have received income $100, no NEC, and $300 we have received NEC, and $600 we have received 10 NEC. So when you will report income, in this case, how much we actually have to report? So in this case, how much is your income, guys? How much we have to report? So can we escape from this? We must report. So this you must report. What about 100? That is also income. You must report. Even though you haven't received any NEC document, it doesn't matter. It is your income, right? So you must pay taxes on the same. If you underreport this, then how IRS can trace? Like you haven't received NEC, right? You received income, no document, no income, no source document. How IRS can trace? If you don't report this income, then how IRS can trace you? So IRS have a lot of options, a lot of systems, like they can trace, not now immediately, but whenever there is audit, then they may trace. They will check your bank statement, and they will check all the ways, all the possible ways whenever there is audit. So if it is less income, fine, but if it is huge income, then they will check your bank statement, everything. In that way, they will ask you to show the source of income. In that case, whether you have reported it as income or not, everything they will check. So at that point, you you have to face consequences. So whenever we have income, you must report the total income. So here we have to report this $1,000 as income. So this is done. And also, yeah, exam point of view, what you must remember SC taxes for $400, NEC for $600. This is clear? Yes, no, anything?
Yes, sir.
And also, even if no NEC, do we need to report it as income? Is it
Yes.
taxable? It
Yes.
is. Income is income, always taxable. Reporting source documents are different, so that is fine. So you can keep the document for reporting, I mean, for audit purpose. But income is income. You must pay income tax on the same. So self-employment income cases where we will report on Schedule Schedule C for reporting your self-employment income. And farmer cases we have discussed, I think, sorry, we have discussed in part 2. Okay. Farmers, Schedule F.
Yes.
Schedule F for farmers. Farmers also need to pay self-employment taxes. Like Indian farmers are quite different than US farmers. So US farmers, they do treat it as like business only. So it is business. So they must pay self-employment taxes on the farming income as well. So both will flow on the Schedule SE. Okay. And also we have other couple of SC taxes. Clergy income. So clergy income also subject to self-employment taxes. So this we will see. So if taxpayer is clergy, so clergy income also subject to SE taxes. So this is very important. We will see the clergy. So important area. IRS love to test on the same. And also, yeah. So side business, which is self-employment income, taxpayer, like let's say taxpayer main business, main income, wages, full-time employee, and also he's having some side business, and which is self-employment income. So do we need to pay? Can we consider it as so in this on this income, do we need to pay still income tax? Yes, even though it is side business or any part-time business or anything, fine. So if it is business is business, so it is part-time or full-time or any seasonal based or any less income, it doesn't matter for paying self-employment taxes. So self-employment taxes we have to pay, even though it is secondary business or even though it is part-time business, also we must pay self-employment taxes on the same. Okay, so this is another important area. And yeah, so in the exam, how they can trick you? So they will tell you taxpayer main income wages, and he's having some side businesses. So do we need to pay SC taxes? So do we need to pay, guys?
Yes.
Yes, we
Yes.
must pay. So multiple income source we can have, but it doesn't change the classification. The classification of business is business. That's it. And in this, what we understood, so 400 or more net income, self-employment taxes, NEC, gross income only. So when we will get NEC, guys?
Gross income more than or equal to 600.
Yeah. So Schedule C for
Self-employment
Self-employment.
income.
Schedule F,
Farmer
Farmer.
income.
clergy service income subject to self-employment taxes or
Taxes.
not?
Yes.
Yes.
Yes. Clergy service income only. So we have different incomes clergy can have. So yeah. And also side business still count as self-employment or not?
Yes, it will count as self-employment.
Yes. So in the tomorrow session, I think it seems it is not seems to be revision, but yeah. So tomorrow I will try to quickly recapture. I mean,
J, I have a doubt.
yeah, go ahead.
J, in SC taxes,
Hmm?
social security